Hello, and welcome to myfinanceteacher.org. Today, I want to have a look at energy. And this is going to be more of a long-term view of energy. And here are a couple of charts I want to draw your attention to. First is the number of crude oil rigs, which of course is the bottom part of this chart. First thing I want to mention here is that notice that just a few weeks ago, the number of crude oil rigs was the lowest over the last 10 years or even longer. So the energy industry, particularly dirty energy industry, has been doing really badly over the last couple of years. And there is an argument that energy is really oversold at the moment. If not crude oil itself, which is close to $40 at the moment, but at least the energy companies. We'll have a look at XLE, basically energy companies ETF, in a moment. Let's first talk about the details of this chart. Crude oil versus number of oil rigs. The reason that I want to have a look at this is that over the last couple of weeks, we see that the number of rigs has started to increase, which means that potentially we've seen the low for the number of rigs. Generally, it seems to me that over the last 15 years or so, the lows in the numbers of rigs were somewhat of a lagging indicator. If I draw these vertical lines from the lows in the number of rigs, I see that they generally come a little bit later compared to these stars that indicate more or less significant lows in crude oil price. Which is logical. A drop in crude oil price takes time to translate into a lower number of oil rigs. So although this oil rigs is a bit of a lagging indicator, still we are potentially turning around and we are potentially creating a low on this number of rigs, which in turn potentially might indicate upcoming strength in the energy industry. Generally, crude oil is trending upwards after these significant lows, at least for several months, although there are some exceptions, such as here, for example, in 2015, after a modest increase in oil rigs, this number of oil rigs dropped again and crude oil didn't really experience any increase after this small local low on oil rigs. But besides this example in 2015, in most other cases, significant lows on oil rigs are usually followed by at least several months of stronger crude oil prices. Although that, remember, is a long-term view. I think that over the next few weeks there is a potential for crude oil price to continue cooling down a little bit. But over the next several months to a year, we're likely to see energy at much stronger position. Before we continue, let me remind you guys to subscribe to the channel if you haven't and click that bell notification. Thanks a lot. Talking about energy rather than crude oil, let's move on to this chart, which is XLE versus that number of crude oil rigs. And we see that here the alignment between the lows on XLE is a little bit better with the number of lows in crude oil rigs. Other than that, the chart is somewhat similar. One thing I want to point out here is that XLE has been underperforming even versus crude oil quite a lot over the last few months. And that also makes me kind of interested in energy at the moment. And again, one more thing to point out is that at the moment, XLE is lowest that it's been over the last nearly 20 years, with that exception of a very severe drop into the peak of the pandemic scare. So in the long term, I want to start accumulating some energy-related assets, and if you want to see details on what we are doing in that aspect, why not join us at myfinanceteacher.org. You can join us by clicking this register button, and the first month is only $5 and it's $10 per month after that. Next, let's have a look at this chart showing the job cuts versus the performance of energy industry. It looks like over the last nearly 20 years, job cuts generally come in patterns of double spikes. Whether this pattern will continue in future or not, who knows, but at least that's what history shows us. We see a couple of red stars here indicating a double spike in job cuts in 2003. A couple of blue stars showing energy industry job cuts in 2008-2009. A couple of gray stars in 2011-12. A couple of brown stars in 2015 and 16. And more interestingly, after a spike in job cuts Back in early 2019, we see a second spike at the moment. If the pattern continues, this might actually be a very interesting positive indicator for the energy industry. With the exception of early 2000s over here in 2001 to 2003, in all other cases, these stars, these double spikes in job cuts, came with a couple of waves down in the energy industry valuation. We see the first drop in energy performance coupled with the first spike in job cuts, followed by a second wave down in energy performance, which in turn is followed by a second spike in job cuts, usually a little bit later, a few months later. Same thing happened back in 2010, 11, 12. First drop in performance of energy sector coming nearly the same time with the first spike in job cuts, and a second hit to the energy sector, followed by more job cuts a little bit later. Same again in 2014, 15, 16. First wave down in energy sector with a lot of job cuts a little bit later, and a second wave down, followed by more job cuts a few months later again. And more recently, in 2018, a big hit to the energy industry, followed by some job cuts a few months later, and a significant hit more recently with the pandemic, and a lot of job cuts at the moment. This pattern also shows me that over the last 20 years, the second spike in job cuts came with at least a year of positive performance in energy industry. Is that pattern going to continue? Is this second spike in job cuts is going to be followed by some nice gains in energy? Who knows? Nobody knows the future, but I think good gains are very likely. Firstly, because energy has actually underperformed even versus crude oil itself. And secondly, in the long term, possibly by summer next year, as people gradually start to travel more, and that will also help energy to perform relatively well. So in the long term, I think energy is giving us a nice buying opportunity sometime around now. Although in the shorter term, it's a little bit questionable. And if you want more details on how crude oil performance over the next several weeks, as well as the performance of the general stock market, is likely to affect energy industry, particularly XLE, join us at myfinancesteacher.org. But even before joining us at myfinancesteacher.org, hit that like button right now and subscribe to the channel. I wish you a very nice day today and good luck in your trades.